This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. This episode is brought to you by BNC Pro, the brand spanking new digital wealth platform featuring an all-in-one suite of customizable institutional-grade applications that help you manage your crypto investments. Yes, research, chart, screen, analyze, optimize, report, and more. BNC Pro is the ultimate portfolio tool for individual or enterprise use. Streamline your workflow, manage your crypto, and master this brave new asset class your way with BNC Pro. Go to bnc-pro.com now to create your free account, or just look for the link in the show notes to this episode. Now, on with the show. My guest today is Chris Brookins. Chris is the CEO at Valiendero Digital Assets, and Chris is a returning guest here on the Crypto Conversation podcast. Hey Chris, good to have you back. How are you?
I'm doing very well. It's a pleasure to be back.
Let's just start off with checking in on yourself and on your health. I've been doing this lately on the podcast, just checking in with where each individual guest is based and, you know, how things are on the ground with where you're at in terms of the current COVID-19 pandemic. So, yeah, I think I know where you are, but tell the listeners where you're based and what the vibe is like on the ground.
Yeah, I think this is a really nice way to start the conversation. The fund and myself, I'm based in Pittsburgh, Pennsylvania. So for those that might not know where that's at geographically in the United States, it's about 8-ish hours west of New York. So still kind of on the East Coast of the US, but we're a vastly smaller city than New York or even Philadelphia, which is another city that's in the same state as us, Pennsylvania. So the vibe is actually pretty chill here. So again, one of the fortunate elements of us being in a smaller locale, not as big a hotbed, so I didn't have to seek refuge and escape the city like a lot of stories that I'm hearing out of New York. And for the most part, everyone here has been following the social distancing and stay-at-home policies without a lot of fuss, in all honesty. So the streets are a lot quieter than I've definitely been accustomed to growing up. But for the most part, things are going okay here, and the situation seems to be fairly in control. Like, I look at the data each and every single day as far as infection rate or even just the number of active cases or deaths, just because it has a demonstrable effect on potentially what could be happening with the investment fund. In Pennsylvania, and particularly our county, has been doing pretty well and has pretty low numbers relative than a lot of other states. So no complaints. We've been very fortunate to date.
That's the interesting thing about the US, you know, because the US is so large and there are so many states, it really is a different picture from state to state, and some states have obviously been hit very hard and some less so, but it's still very difficult to really get a sense of what's going to happen going forward, and also you sort of get the impression from the outside that all states are tackling things a little bit differently, and shall we say.
For sure. What's great about the U.S. is also what can make it bad in situations like this. Like, we have the freedom to move about states, like unencumbered, and we have the ability, you know, we're not under a very harsh lockdown. Like, we're being told that we need to social distance and stay at home and works are closed, but I mean, for the most part, you know, if we wanted to go to the park and play a game of pickup basketball, like, sure, maybe someone would come by, maybe the police would eventually get called, but, you know, we're not going to get thrown in prison or anything like that. So it's very interesting dynamic that makes it a little bit tough for us to all get on the same page sometimes. But for the most part, I'd say 90% of the country is falling in line and just doing what needs to be done so that we can get this remotely in our rearview mirror, or at least diminish it as best as possible until a vaccine can become produced. And then there's the 10% of the population, which are essentially, you know, ignoring it and or boycotting the local capitals of each state for business to be able to open back up because they're being hit incredibly hard economically, which in essence, they're kind of boycotting for the right to get sick, to go back and, potentially contract the coronavirus or whatever's out there. So it's really interesting. In my state, Pennsylvania, just recently jumped in to the protests in our local state capital with people that are not from Philadelphia or Pittsburgh. We so aptly call them Pennsyltucky people because our state is quite wide, meaning so there's two big cities on each end of the state. So there's Philly on the east side, and then there's Pittsburgh on the west, and then in the middle is just country. And Kentucky after some of the places that are in the South that don't have the most progressive thought processes tend to dwell within Pennsylvania. So that's sort of the thing that's been going on is we assume those individuals have kind of jumped in the particular protest. So really, really interesting and chaotic times that's going on. But for the most part, like I said, everyone's falling in line, and the numbers kind of like prove it out in the data. We've begun a plateau and also begun to decline a little bit. So hopefully we can continue on that particular trend and trajectory along with the rest of the world too.
Very nicely said, Chris. Well, I hope that is the case. And look, I'm sure we will talk a lot more about COVID and the cascading effects of COVID around the world as we go deeper into the podcast. So one of the things I wanted to talk to you about today, Chris, and just, for the benefit of the listeners, your background is you come from the traditional markets, but now you're a trader and an analyst and a quant guy in the crypto markets. And so from that perspective, you are the co-author of a report along with Andrew Gillick here at Brave New Coin. And that report is called Safe Havens, How Gold and Bitcoin Can Adapt to a New Paradigm. And so I guess we're talking about, this economic crisis that is happening all around the world around us. Interest rates are falling, central banks are printing money, and so of course safe haven assets are back at the forefront of the conversation, and specifically really gold and Bitcoin. So your report explores what the function of a 21st century safe haven could be and should be, and really in the context of Bitcoin, right?
Yeah, that's correct. I think you hit the nail on the head.
So the big idea here, Chris, I think is it's really about Bitcoin's path to becoming a true store of value and a true safe haven asset. And this has always been the narrative, right? And Bitcoiners want this to be the case. We want to see Bitcoin as being uncorrelated with any other asset class, being a safe haven, being a store of value. And, this is the narrative and this is where we're heading, but it is still a bit early. And so as we saw last month in March, Thursday, March 12, Black Thursday, we had this really quite serious, quite major Bitcoin crash. So a lot of people have tried to make the argument that because Bitcoin did crash very severely then, along with every other market on earth, to be fair, the implication is that Bitcoin is not yet a store of value or not yet a safe haven.
Yeah, it's interesting. So I think individuals or firms that would have had that particular criticism kind of lost a little bit of credibility with yesterday's drop of oil prices essentially going negative. And just what I mean about that is just talking about like systemic vulnerabilities and, outsized volatile moves, essentially saying like Bitcoin is too volatile to be a real store of value asset that institutions and or individuals might want to park their fiat cash in, especially in uncertain times. So I think that particular criticism had some validation early on, because for sure, Bitcoin did drop, but so did gold. And if you kind of look at the historical imperatives, or at least the historical narrative of how these things play out, in liquidity crisis, the reach is for cash, and the cash that is the reserve of the world is the US dollar. So that's what you saw really picking up via bonds. So in those types of liquidity situations, that's what everyone is going to rush to. And gold is not going to be any less affected, and neither is going to be Bitcoin. Should have fallen 50%? No, it should not. And there's no way that you can necessarily model that from data, from a quantitative side with how we do things with Valiendero. But what you've been able to see is it got a lot of buying pressure around that sort of like multi-year low or the 2019 low around 4,000, and has since, marched back to where, yes, it's down a little bit for the year, but in comparison to the equity markets, obviously oil being the big one, and some other traditional asset classes, Bitcoin's actually standing up fairly well.
Yes, you're exactly right, Chris, and I completely agree. And you're right. So in that first instance of just a global market crash, of course, there's going to be a liquidity crisis and people are going to go to cash. That's going to happen across all markets. And as you pointed out, the interesting thing about Bitcoin is, it kind of has recovered a lot of the ground lost. And at the same time, it hasn't had to have any kind of intervention from a government or a central bank or anything like that. Bitcoin has just done what it has done. And so from that perspective, it has shown quite significant resilience, right?
You're exactly right. And we even put that in the Safe Haven report, is talking about, yes, in the short term, these types of liquidation events that happened, and or maybe even some additional headwinds that might come from negative oil prices. No one really knows the interconnectivity. But in the short term, Bitcoin and gold too are going to experience some negative volatility like in '08. So gold was down in '08, but started to recover far faster, and then ultimately eclipsed the equity markets for the first, 4 or 5 years of the bull run brought on by quantitative easing, which again is also in the report as well. But yeah, I think you're exactly right. So short term, there's always going to be a little bit of risk because it's an uncertain environment, one that we've never experienced in our lifetime. But it's laying that foundation to where you're seeing it come back and be more resilient. And furthermore, it's done that without any artificial propping up, doesn't need a bailout or anything like that. So you're gradually seeing this grassroots, adoption. I mentioned it in the report, is what Bitcoin needs to do is essentially cross the chasm where you can look at the early adopters for Bitcoin as individuals or institutions that just happen to not be born, like myself, in the United States, where all I've ever known is the US dollar, the global reserve currency. So individuals in Argentina or Venezuela or any country that has historically had a poor monetary policy and weak fiat currency, you're already seeing them in droves go over to Bitcoin because they know it's a better alternative store of value, regardless of its volatility profile that you see on charts. It's way better store of value, in the near, medium, or long term compared to their local fiat currency. And that's only going to continue to grow, especially as, the interconnectivity of this whole COVID brought on recession, possibly depression, kind of plays out. And then the next big wave that you're going to see where you really start looking at Bitcoin on the same scale as a 21st century store of value and chipping away at gold's market share is whenever you start crossing the chasm a little bit into the mainstream adopters. And that's going to be developed world countries. So I don't know what that, will look like or who that'll be, but it's like, if you looked at Norway or Sweden or, Austria or anything like that don't have a world reserve currency, but for some reason there was an impetus to say this isn't working. The fiat current system is not working. We need to switch to some basket, whether that is a grassroots of the citizens of this country or a central bank, a top down, where they're saying, all right, we're losing credibility, our rates are going high, whatever it may be, we need to go back to some partial peg. And a la the Bitcoin standard, maybe that is a basket of the US dollar, maybe of gold, of Bitcoin, of silver or whatnot. And that's how you really start seeing that escape velocity. But I think the principal thing that's really going to attract people is, just like you said, is the fact that Bitcoin is still in the game, still taking punches, still giving punches, and it's gotten no help or any bailout from any central bank or any centralized government around the world.
Exactly right. And, the important point to keep in mind here is that it's crazy to think really that Bitcoin is only little over 10 years old. And as we all know, Bitcoin was born out of the 2008 financial crisis, and now is, the stage really has been set for Bitcoin to start to come into its own in the current unprecedented global crisis. But I think, it's a little bit uncertain as to just how deep this recession or perhaps depression goes, because with the incredible interconnectedness of global systems in today's world, the cascading effects across all systems, whether it's economics, the environment, the social unrest, and political systems, there's really the danger of systemic risk to all of these systems, and which can kind of trigger cascading ripple effects across supply chains and health outcomes, political outcomes. Everything feels a little bit unsteady right now.
For sure. 100%. This isn't something that anyone has really experienced in our particular lifetime, and this dynamic is very. It's sort of an amalgamation of a lot of different events that you've seen from a historical perspective. So like I myself, who really enjoy economic history and have been really well read on economic history, I'm struggling to kind of draw the parallels of it. So I've got to kind of like pick different areas to try to put together kind of like a mosaic to see like, okay, how severe is this? How severe could this get, and how do we potentially see ourselves, as an economy coming out from it? So I think it's a really unique perspective, and it's impossible to model because you don't know the interconnectivity. Like you don't know who are holding the oil futures contracts that went belly up yesterday, and how that's going to create margin calls for this different place that has loans at a systemically, important bank for one country that connects to another country. So there's all these like layers and webs of the spider web that you have no idea, but you can, at least from an investing perspective, you can try to understand it as best as possible in terms of likely outcomes, maybe assign a probability to it, and then try to figure out a way to, put yourself in the perspective or put yourself in the element to take advantage of it. For one of those paths that you're looking at. So it's like for Bitcoin, yes, near term, the unknowing, the uncertainty has been affecting like our trading, because there's this constant guillotine over the head of the Bitcoin market because of the heightened correlation that we've been seeing with equity markets. So if those start tanking again, the odds are Bitcoin is going to start tanking again as well. But while trying to like marry that with the medium to longer term view that given how deep this crater is and probably the extent of what governments and central banks around the world are going to have to do to have some form of graceful deleveraging to stave off a deflationary depression, it's incredibly bullish for the Bitcoin narrative and potentially gold as well. And I think ultimately it'll accrue far faster to Bitcoin because it's more easily, purchasable. You can move it a lot better. The fees are a lot more friendly for the retail as well. But also, as I sort of talked about in the report, is this same dynamic that helped drive this bubble that was essentially given the blessing by central banks around the world, not only in public equity markets, but also in private markets as well. is the fact that, at least in this country, there is a lot of unfunded retirement liabilities, whether that is in the local, state, municipality levels, or even in the public corporation levels. There's tons of data on it to see. So it's like, you have this gap and you need to chase yield as best as possible to be able to fill it, because the baby boomers aren't getting any younger and are going to be retiring in greater droves. Now you just took a 50%, or 20+% drawdown, and potentially even worse, if you can come out of it relatively whole, now you've got an even bigger unfunded liability gap, and the world is, experiencing or coming off the back of this, dramatic event. You've got to look for an asset class that can help fill the gap quickly, because boomers are still going to need to retire at some particular point. And really the only asset class I can think of that has the return profile to potentially fill in that gap at a relatively quick pace are the digital asset space. So, you got your Bitcoin, and then obviously that'll open up to some other assets, reputable ones within the space, Ethereum and blah, 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 down those top sides. So I think, again, short term, you've got to be very nimble, but there's a lot of positive narratives and a lot of positive elements that are starting to stack up on the side of store value assets for the long term, and particularly Bitcoin.
Yes, Chris, and look, it reminds me, just this morning I read there was a tweet by Ari Paul, who at Block Tower, and he was talking about this idea that there is this global dollarization argument, and he referenced Raoul Pal, who's been talking about this as well. I think he thinks the US dollar is going to do well in the short term, just as the leading fiat currency. But he also said that banks have been publishing sell-side research suggesting that investors certainly should look at allocating, 2 to 10% of their portfolio to gold and digital assets, just in case, as a hedge in case inflation does become a serious near-term threat as the money printing continues.
Yeah, it's tough. It's tough to say, and obviously, Rao has a lot more experience from a macro perspective than I do. All I can look at is historical narratives where, I saw the video with him, and I'm blanking on the trader's name, but it'll come back to me. But he's well known. But they're talking about how bullish they are in the dollar, and it's like, whenever the dollar is going up, so that's what gold is denominated in. That's what, primarily what Bitcoin is going to be denominated in. And then if we've got this deflationary forces that are at work here, and then I saw a lot of charts that he put out today, essentially looking at commodity prices that are quite scary whenever you think about the potential ripple effects of those prices falling through the floor. That's a heavy deflationary scenario, coupled with we've got the most debt in recorded history, throughout the global environment. So that again begets more deflationary pressures, which is going to increase real rates. So a strong dollar and higher real rates typically is not good for gold. That is something which is not going to be good for Bitcoin as well. So that's something that I'm constantly trying to think about and marry in my mind. Where they see it happening is because of those forces, more and more, money printing, more and more monetary stimulus, more and more fiscal stimulus is going to need to be done to essentially have what Ray Dalio would call a beautiful deleveraging, trying to slow the painful deleveraging process of it, which that's the historical playbook. And that's whenever at that point you see gold starting to take off. Gold will fall in that deflationary initial phase, but then it'll start increasing once the money printer turns on, and also fiscal stimulus starts running through the economy. Given we've been doing that for the past 10 years, I'm not necessarily 100% sold on its efficacy. So it's like, if we run into a situation where the Fed's saying, don't worry, I'll buy anything that moves, and the government here says, or around the world say hey, we'll do a universal basic income as a way to, fill in the demand gap, we might be able to get away with that in the US because we've got the reserve currency, but not necessarily around the world. And maybe that doesn't even work. The demand drop coupled with the debt overhead that is eventually going to create more and more corporate defaults and consumer defaults. Maybe that's just not enough this time around. And under that scenario, gold and Bitcoin price are going to suffer. So there, again, it goes back to this narrative or this talk of looking from like a short-term perspective, but then figuring out how you can get past that and then look to what's going to come next. So the short term, if the dollar does strengthen, I don't know if that's going to be overly positive for gold and Bitcoin. But especially if the government, the monetary policy and fiscal policy is able to create a beautiful deleveraging and just push more and more money into the economy, which essentially just stops a crash. It doesn't really do anything for aggregate demand, as we've seen over the past 10 years. It just props up asset bubbles. Then yes, Bitcoin and gold are going to do demonstrably better. And then as these policies potentially have the ability to spiral into something stagflationary, I think is more likely in this country, given we've got the reserve currency versus hyperinflation, which crypto Twitter would have you believe is right around the corner for every country around the world. I don't believe that that is the case. So I do believe there's a lot of elements, again, stacking up on Bitcoin's side that are going to be quite bullish for price in the long term. But again, there's this short-term dynamic that individuals need to take into consideration. And we touch on a couple elements of that within the report.
Well, let's talk about some of those short-term potential drivers then, Chris. So specifically Bitcoin, of course, there is a little bit going on at the moment, to put it lightly. So you will have noticed probably that the Bitcoin hash rate is really, it's right up there again. I think, close to all-time highs, if not all-time highs, after, it did drop back significantly in March around the crash, no surprise there. But now it's really back up there. Of course, that old favorite, the Google search terms for Bitcoin halving, absolutely through the roof, also at an all-time high. So not surprising really, because there is this powerful narrative around the halving. The halving is now, well, it's about give or take 20 days away. And I don't know if you saw Brian Armstrong from Coinbase. He shared an interesting chart he put on Twitter that it showed, I think, some user activity on Coinbase, just showing the transactions that corresponded to roughly purchases of Bitcoin in $1,200 US. So I think you can read between the lines what that means. So look, this is all anecdotal stuff, but it is interesting. And so look, how has your perspective changed on the halving, or does this change nothing? And is it just sort of a short-term event, really leads to a supply shock, and the true narrative will play out in the sort of the year or 2 years after the halving? Where are we at? it's
really interesting because like the halving is one of these things which ultimately kind of like flows in the stock to flow model. That is, the halving, it's fairly unproven, like where people will look and say like, hey, based upon these two prior halvings, Bitcoin is going to explode up in price because of X, Y, and Z. And it's like, okay, that narrative makes sense for sure. But at the same exact time, that's a sample size of 2. So that's not overly robust data analysis. And I'm not sure if that's like something that you'd want to necessarily like stake your LP's capital or your hard-earned retirement money on. But again, as we, as something that was touched on by Andrew within the report, is Bitcoin is highly contagious in terms of narrative, which drives demand, which will drive price. So touching on sort of like what Brian Armstrong put out, I 100% believe that those charts are factual, because there's a lot of millennials out there that are probably receiving their checks and can read what's going on within what's happening in the greater monetary policy, but also in the economy as well. So I think that is 100% the case. What worries me in the shorter term, especially as difficulty is about to increase in 20 odd days, is the fact that if that's true, we've already received our stimulus checks here, which means potentially that big boost that we saw. So price touched 6,500 sometime last week. I want to say maybe it was like Wednesday or Thursday, and then instantly kind of like shot back up and, touched 7,200, might even have gotten a little bit higher. That might have been, and we were seeing some signals that, volume is starting to shift over bullishly before that had happened. So that might have been the stimulus boost right now, and then price has begun to sort of drift back downward. So that's something that we need to take into consideration as well. Another thing is that's all fine and dandy, saying that additional millennials and even other people within the US, baby boomers, Gen X or whatnot, are seeing the writing on the wall and looking to get allocated to something that has a fixed supply. But we have had over, 20 million jobless claims, reported over the past few weeks here in this country. So it's like if 15, 20, 25%, 30% unemployment becomes the norm for, let's just say, the next 12 to 18 months, which I don't know if it will be or not, it's tough to see additional demand coming from the retail side or even from institutional side's got different time preferences and stuff like that, but definitely from the retail side, whenever they've just lost their job or, maybe they're forced to take a pay cut, or maybe they're constantly on pins and needles and don't know if they're going to lose their job, next week, next month, next quarter or whatnot. So again, it goes back to a lot of these really unknown variables in the short term, despite the fact that, this was supposed to be a great year for Bitcoin, given the halving was coming, and the narrative around the halving and Bitcoin is that always produces positive price outcomes and typically dramatic price outcomes. So I don't necessarily know if that's the case. Again, I think the critiques where people talk about it so demonstrably is just flat out like it's bad. It's pseudo data science, given it's a sample size of 2, where I could see that happening again in the medium to longer term is you see that chasm where more and more people from developed, especially after the economy bottoms out and stabilizes, they're like, all right, we need something different. But also, again, as I was talking about institutions, pension funds saying, crap, now we've got a 50%, gap in funded liabilities down from 70%. Where can we go to try to fill this as quickly as possible? Because I've got, 10% of my workforce supposedly retiring next year, and then so on and so forth with the baby boomers. That's the big push that I could definitely see taking Bitcoin from where it's at currently to over 100,000, 2, 3, 4, 5 years down the line. But again, these are all just like narratives and hypotheses that I kind of see as a line of possible outcomes, that will have to constantly like reevaluate and readvise based upon what happens in the shorter term, if that all makes sense.
Yes, indeed. Yes, indeed. I think that makes a lot of sense. And I think you're right. There's every chance that retail demand will drop and has to drop simply because, as you say, people are going to have less cash because so many people are going to be unemployed, and just in that kind of environment, people aren't going to be willing to put quite so much into what are essentially very risky assets. But the other side of that is, I guess, Bitcoin still has that very attractive risk reward profile, and no one's suggesting you go out and put all your money into it, but there's still that case that maybe, just maybe, 1 to 5% makes sense, whether you're an individual or a pension fund or a hedge fund or whatever it is.
I totally agree. I mean, if there's some stability within the general economic environment, and I think the odds, I think everyone realizes that a V-shaped recovery is just not going to happen. So maybe it can be a U-shaped recovery or some sort of derivation therewith of. Whenever there's some stabilization, the narrative and the stages is set for, a Bitcoin or gold to really benefit from this at all. But, it's tough to see a real big demand boost, specifically from the retail side, while you've got economies essentially shut down throughout the world. So like the oil market, that's startling for me, not so much because like, oh, oil's in negative territories and all the stuff that it can mean for, the interconnectivity of margin calls and stuff like that, which is going to be credit contagion. I have no idea in what frame or fashion, but that's alarming to me to show that there's actual logic behind why the prices are negative. It's because there's such a glut of oil. Demand has essentially shrunken to zero and it's storage costs. So it's like, no, you want to buy oil, you've got to, if you want to acquire oil, you've got to pay me, to be able to do, and that's pretty crazy to think about that and what that could mean for economies, not just now, but like a quarter from now, 2 quarters from now. It's not like it's just going to spring straight out of the doldrums. So that's what's worrying. And also, again, that's where, you've got to look at things from that retail perspective and like, okay, I could see how this could happen, but we've got this guillotine hanging over everyone's head.
Well, let's talk about that recovery then, Chris. If it's not going to be a V-shaped recovery, and look, I think that's right, but the current crisis it's accelerating some trends and it's starting some new trends, right? So I'm seeing people talk about, the rise of localism and perhaps a move out of the cities and, back to not rural areas, but, less densely populated areas. And, this is true in some parts of the world and less true in others. There's talk of, green zones and red zones and potential borders between states. Did you see Mark Andreessen this week? He tweeted, he wrote that the call to arms, it's time to build, right? So there's guys like Mark and Naval and Balaji Srinivasan, the sort of, I guess, the Silicon Valley VC guys, right? And they've been really interesting. And, there's this pushback against them, but they've got some very interesting ideas as well. And I guess what I'm getting at is, in some respects, it is almost an opportunity for a little bit of a reset and perhaps for some fresh thinking around the world and always some opportunities in, this kind of devastation to rebuild, which is obviously what Mark was getting at. But it's difficult when in the US, the choices that you guys have are Trump and Biden, and it's just hard to see those guys really embrace kind of fresh thinking of the type that Mark and Naval would encourage. Yeah, what are your thoughts?
It's really, really alarming. And then I've been one of those people, and I'm sure I'll catch flack for it, but I've found the rise of Trump and the presidency quite hilarious, outside of the human rights violations that he's been doing and the overly, sometimes racist policies he would put in place. It's been quite entertaining. And I've always gotten a good chuckle because you have to be able to laugh in the darkness, but how things have been going and his particular antics. And then the best candidate that they can put to run against them is Biden, has me quite worried about the future of leadership within this country for the next 4 years. But with that being said, fortunately, Reagan essentially proved that top-down economics is a fable. It's stuff that's written in textbooks, but doesn't actually happen well in the real world. The whole trickle-down effect. The rich just get richer, and then the poor get sort of scrubbed out at the bottom. So this isn't something that's going to be driven from the top levels. There's some elements and policies and tariffs that can be put into place, but I think ultimately it's going to come down. It's going to need to be a bottom-up movement that has a lot of validity, in all honesty. So everyone's calling this the Great Reset. And I think that's exactly what it was, because like with anything in life, you're constantly looking for equilibrium and to find that sweet balance, but you're never going to find it, to sort of parlay off of George Soros. You're always going to go too far in one way or too far in the other way, but you're constantly going to be looking for that equilibrium. And I think we've gone way too far in the side of globalization, but also the pursuit of efficiencies. It's okay, well, I can do this well, China can do that well, we'll outsource to this, we'll outsource to that, all in the sake of creating more and more profits for stakeholders and essentially funding crony capitalism of what we have in the country right now. And that needs to stop. And I think people are seeing the real risks that are associated with that from a health perspective. It's like where you've got something that originated in China that now has essentially stopped all commerce throughout the world. And not just that, but stopped a lot of important, I think it's way overblown, them talking about like our problems with manufacturing and the risks and stuff like that in this country. A lot of it's just attention, getting stuff, but there is some validity to it as well, to where we should have had more manufacturing capacity to turn on to be able to, have a faster response to whatever we need, whether it's ventilators, masks, or protective equipment, blah, blah, blah.
That's right, Chris. And look, I mean, this is an idea that, Peter Thiel has been talking about this idea for years, right? He's made the argument that in America, the innovation in the physical world, and he's talking about building and manufacturing, etc., has really fallen behind. And, he makes the argument that there hasn't been any true new innovation. And yeah, to some respects, that has kind of played out.
I completely agree. There's a lot of smarter people than me that have been, essentially sounding the alarms of this. And now this just like brings it into live and living color. So I think this is going to catch more and more steam, re-onshoring some critical things, even from a geopolitical standpoint. There's national security, things whenever our supply lines can be cut like that, not just us, but also other countries as well. So I think there's a lot of things and paradigms that are going to start going in reverse. I don't know what trajectory, but the longer that this sort of like global commerce lockdown persists, the more stark that it's going to be, which will be painful in the short term, but might be that much better in the longer term. And then you couple that with the fact that I don't know when people are going to be ready to like readily travel again as well. You see a lot of these things where, they would feel comfortable traveling again if there was immuno tests verified on everyone that's taking the plane and stuff like that. And it's like, this is going to have lingering effects and way more interconnectivity than we can possibly imagine. Again, I don't know what shape or fashion that's going to play out in, but I suspect that it's going to be quite lingering, and it's going to ultimately change, the landscape of global commerce, of the economy, and what we do. And I think ultimately it'll put us more. It'll put the global economy more at a less efficiency and optimization mindset versus, a sustainable mindset. I just hope that it's done in an orderly manner, and not a disorderly manner. And what I mean by that is like the old adage is saying whenever goods cannot go across borders, global trade, troops go across borders. And that's typically, what you've seen in earlier wars of the previous decade, World War I and World War II. So it's like, barring those types of situations and, which you see cropping up more and more with China not wasting a crisis and, using it to try to muscle in geopolitical areas, as long as we can avoid those, negative outcomes, I think ultimately that'll be a more sustainable and better future for the economies around the world.
Well, Chris, let's hope so. Look, I think we better end it there. Look. Normally at this point we'd finish off with the crypto conversation hot take round, but you're a recurring guest, so we've been there, done that. So if anyone wants to hear Chris's hot takes, you can listen to Chris's previous appearance here on the crypto conversation. So instead, look, let's just finish off with any thoughts, Chris, on just how you've been passing the time with some more time in your home environment. Any positives, or what have you been watching on Netflix? What's been going on for you?
Yeah, just trying to keep life as normal as possible. So going for walks whenever I can, working out as much as I can to keep a fresh mind, because it can be like Groundhog Day recurring. But yeah, I mean, I'm getting sucked into a lot of the same shows that a lot of the world's getting sucked into on Netflix. The Joe Exotic documentary was hilarious. I'm a big fan of the Spanish television show called Money Heist, La Casa de Papel. For those that are from the Spanish speaking part of the world. But yeah, like just getting sucked into a lot of those and everything. Last time we talked about The Expanse, I would kill for a new season of The Expanse right now. But yeah, just trying to be useful with my time, but also at the same exact time, like, you know, trying to use it as downtime. So Netflix a lot, Amazon Prime.
So with Money Heist, someone recommended that to me, and I had a look at that, and I think I read a review, and it said it was making the case that you should watch the Spanish subtitled version instead of the dubbed version. Which one are you watching?
So I speak Spanish. My fiance is a Spanish teacher, and obviously in our part of the world, we've got more Spanish speakers than where you guys are at. So I just watch it in Spanish. I do have subtitles on too, but Spanish subtitles to help me out because they do speak, you know, sometimes rather quickly. But I would agree with the article that you read. I would watch it in Spanish and then just have English subtitles because the characters are what really makes that story quite unique and like interesting, and it's well written as well. But I feel like if you had, you know, a dubbed over voice, you'd miss a lot of context and it wouldn't be as good. So I would tend to agree with that particular article. You know, just you know, get out the reading glasses and, you know, and just buckle in. But it's totally worth it. They've got some really, really iconic and interesting characters within that show. I just finished the 4th season, so I'm now tapped out until the next one comes out.
Awesome. All right. Well, thanks for that recommendation, Chris. I might give that a try, subtitles and all. Well, hey, look, it's been a pleasure having you back on. Good to chat to you today, Chris. Hey, look, stay safe, and I'm sure we'll talk again soon.
Likewise, Andy. It was a pleasure talking to you. I'll talk to you soon.
There you go. That was today's episode. Thank you to Chris for coming back on the show. Links are in the show notes to that report we discussed today. Safe havens, how gold and Bitcoin can adapt to a new paradigm. Links also in the show notes to BNC Pro, the new digital wealth platform featuring an all-in-one suite of customizable institutional-grade applications that help you manage your crypto investments. BNC Pro is the ultimate portfolio tool for individual or enterprise use. You can streamline your workflow, manage your crypto, and master this brave new asset class with BNC Pro. And you can go to bnc-pro.com to create your free account, or of course you'll find a link in the show notes. All right, we're done for today. That was us. This was the Crypto Conversation for Brave New Coin. Stay